Compass Mining is your trusted partner in Bitcoin mining. Whether you're investing in one machine or thousands, our customizable solutions are tailored to meet your needs. We are your experts in Bitcoin mining, offering a platform where individuals and businesses can purchase hardware, host machines, and access a range of ancillary Bitcoin mining services. We also specialize in large-scale site development and data center operations. Discover more at compassmining.io and see how we can power your success today. Hey miners, welcome back to the channel McNallie Money, the official home of power mining analysis. Here we have it, the final podcast of 2024, and what a year it's been for the Bitcoin mining space. That's the topic of today's video. We're going to be looking back over the last 12 months, talking about the key developments and catalysts, not only for Bitcoin, but for the Bitcoin mining stocks as well, some of the highs, the lows, and everything in between, plus some additional news from both Bit Digital and Hive that further extenuates some of the themes we're going to dig up in today's video. Before we get into all of it, please take a second, hit the like button, you guys. It's a big help to myself and the channel, specifically in getting this content to other people like you who may find value. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below how you're feeling about the Bitcoin miners heading into Q1 2025 and your favorite or top pick for the upcoming year. Now, with that being said, let's get into today's video. Okay guys, so Tuesday, December 31st, about midway through the trading day, only hours left in the year for Bitcoin price and the miners to finish off their yearly candles. So Anthony, what a 12-month period it's been. We're going to be looking back at some of the key catalysts, the highlights, some of the, I guess, lowlights of the year as well. It's been really a mixed bag of volatility in the Bitcoin mining space, but looking back over the last 12 months, it's been an incredible journey for Bitcoin, and that's really where we wanted to start today's conversation. So bringing up the Bitcoin price chart here, Anthony, depending what time today you pull the price, up about 124, 122% year to date in 2024.
Oh, it's been a great move for Bitcoin this year, and we have to say really that the biggest news stories around the Bitcoin was at the start of the year when the ETFs got approved, and a whole raft of them got approved all at once there, around about the 10th of January. And since that date, it's been fairly relentless in terms of buying Bitcoin. So this has given investors and institutions an opportunity to invest in a Bitcoin proxy investment, and they pay they pay the money to the investment, and then the actual fund then has to go and buy Bitcoin. There's no other asset class that can compete with Bitcoin. You can't go and buy, bonds or anything like that in the hope that they'll get to 120% or whatever it is in a year's gain. So you have to go and buy Bitcoin itself, and it's exceeded my expectation. I'm sure it's exceeded many others' expectation. We just look at BlackRock have got nearly 500,000 Bitcoin now in their fund, and I was thinking about this today. I mean, it's getting to the stage now they've got getting on closer to 3% of the whole circulation of Bitcoin. You got Michael Saylor, another big news story this year, with 2% of the circulation. That's nearly 5% held by two institutions. I don't know. Part of me is like thinking, is that a good thing or a bad thing? What's your thoughts, Bryce?
It's a great question, especially as Bitcoin is designed to be a decentralized payment system. So it is a good point you bring up there, Anthony, but we have some stats specifically about the ETF. Just incredible demand and uptake for the ETFs, Anthony. Now, over the past 12 months, since January 2024, they've recorded $500 billion of cumulative daily trading volume. These ETFs have now surpassed $37 billion of net inflows. IBIT has grown to $52 billion in assets in just 11 months, marking the best ETF debut ever in history. And IBIT itself, so this individual Bitcoin ETF, is now approximately equivalent to 50 European market-focused ETFs, which have been in existence for 2 decades. So if you look at the overall demand here, whether you're talking about IBIT itself, the ETF adoption overall, or just the cumulative inflows that we've talked about throughout the year, really highlighted in HODL 15's charts, the demand, as you say, Anthony, is insatiable. Now, one of the key differences you highlighted in prior years, people looking for exposure or Bitcoin proxies really had very limited options. There was Grayscale, GBTC, or there was the Bitcoin miners. 2024 was really the first year people had more items on the menu to choose from. So, can you talk to us a little bit about how this impacted the Bitcoin miners, maybe compared to previous years?
Yeah, I mean, the Bitcoin miners are a great proxy for Bitcoin itself, and another way of actually, investing funds into a Bitcoin, related investment. But with the ETFs, it looks like we've seen, a move away from some of those investors that were looking in the mining space to invest in ETFs. The volatility of Bitcoin and the ETFs is less volatile than the mining space. But we said on many podcasts before that volatility in the mining space does appeal to a certain type of investor. If we've had days this year where we've seen some of the big stocks have gone up 20, 30% in a day. If you can time it right in the mining space, there was some really, really good profits. I mean, 2023, after the Bitcoin price had fallen all the way to $15,500, we saw that start to recover. And the mining stocks last year, I think the average price increase across the board was like 400% in mining stocks. If you'd have bought at the sort of like beginning of 2023, when really nobody was really buying that much because we'd seen Bitcoin fall from 69,000 all the way down to 15. 2024, we started the year at 42,000. You're quite right. We've got to well over 100,000 in December, reached a high of 108,000 in December, back down today, around about the 94,000 level. It's been quite volatile today, but the impact there is it's volatile. So maybe some of those investors that were heavily into mining stocks previously have moved away into other less volatile stocks, and maybe the ETFs are one of those options for them. Also, there's also you can purchase Bitcoin as well, so maybe more adoption into Bitcoin space. People are buying a little bit of Bitcoin, having the direct access to that. So that may be one of the reasons why we've not seen a more succinct correlation between mining stocks and the Bitcoin price this year.
Sure. Yeah, it's a great point you bring up there, Anthony. Now, one of the other, I guess, headwinds you could call it, similar to the amount of variety people had to choose from in terms of the investment decisions, was the halving itself. So this was something that occurred in April. We talked about extensively on the channel for the months leading up to that event, really highlighting three key things the miners needed to do to prepare for this event. So I'll let you remind the viewers of those key points, Anthony, and then maybe we can talk about how this really impacted hash price and some of the future planning of these miners.
Yeah, I mean, I've been talking about these, what miners should be doing a year before the halving in terms of preparation. And you're quite right. There's a number of levers that they have the ability to consider. The first thing is obviously look at the biggest cost these miners actually come across. It's the energy cost. So by accessing the cheapest energy available, where you can mine Bitcoin is obviously going to be a plus there because there is a disparity in terms of prices by state, by location. So some miners are able to attract really low rates. We've seen the miners in Texas attract really low rates. We've seen other miners not so, attract not so rates. Some miners are in Europe where the rates have, been challenging there. There's jurisdictions applying taxation, so that was a problem. The second thing is making sure you've got the most efficient fleet. And believe you me, we've seen two or three of the miners really go into that lever this year. We've got the likes of IREN now, who've got, effectively a fleet of the most efficient miners on the market. So their efficiency at the moment is 15 joules a terahash. there are S21 XPs that will operate at 13.5, but the next best miner is a 15 joules a terahash, and IREN have got literally a fleet of 31 exahash operating at that level, and it does make a significant difference. CleanSpark as well, they can be congratulated. They're down to about 17, so they're hot on the heels, and they've got a big order in place for some of these S21 XPs. So if they bring those into play there, the average efficiency of their fleet will also drop, closer to that 15. And then you've also got the likes of Marathon and Riot, who've been, again, building more than 20 exahash in a calendar year. So all four companies we just mentioned there increase their hash rate by in excess of 20 exahash in a single year. We talked about the sort of like the 4 or 5 miners at the start of the year, how they were going to perform. And 4 of those miners have literally achieved what they said they planned to do. The only one that didn't really do that was Bitfarms, and Bitfarms' share price has probably reflected, the challenge that they've had. And it's not all down to Bitfarms' fault. I mean, you can buy machines. I'll tell you now, having spoke to suppliers and people in the industry, not every box of miners is the same as the next box. And, you might have a batch that works perfectly well, and the next batch that comes through may not work as well. And we know some miners this year have had batches where they've had to return those batches. They may have been operating right for a few months, and all of a sudden there's a problem with the whole batch. They go back, and that period of sort of like replacement, bear in mind, the likes of the big suppliers, Bitmain, you've got MicroBT, you've got Canaan, they're probably inundated with orders because the Bitcoin price has been rallying. Everyone wants to mine Bitcoin and with the most efficient machine. So, the focus on delivering new orders and then having to replace orders, it's been a challenge. And to be honest, I think Bitfarms have been a little bit unlucky this year in terms of maybe having some bad batches of miners, because generally in last 3 or 4 years, in terms of operational performance, there's only Hive that can really keep up with Bitfarms. So we've seen that this year. So those things. We also said there was a third lever. It was having a cash runway. So when you go through the halving, and we saw that halving drop from I think it was $110 per petahash per day, the hash price. So remember that term, the hash price. That's what we do to compare what the revenues a miner can achieve using, on a daily basis. A machine, we can calculate the actual revenues quite easily. Knowing what the efficiency and the cost of energy, you can calculate the actual revenues very quickly on a machine. So the hash price went from 110, dropped down to 60, then to 55, got as low as just below $40 a petahash per day. And that's really challenging. So for those periods where it was at that point there, having that cash runway to keep the bills getting paid, waiting for, hopefully, like in previous cycles, the Bitcoin price to rally, miners needed that. And these 3 key points were sort of like, I talked about these, on interviews with CoinDesk and for articles for Compass Mining, a year before the halving, to explain what they should be doing. And as you said, many of the miners did get that preparation in place. And, from a performance perspective, they benefited from that. However, as I indicated earlier, the share prices haven't reflected that same performance, and we've already indicated a number of reasons for that.
Sure. Yeah, it's a great summary walking through kind of some of those targets. And you talk about how well the market rewards people successfully achieving targets, but also equally, I guess, takes or penalizes those companies if you're unable to achieve them. Now, one of the other themes you've talked about throughout the year, Anthony, is the Bitcoin network difficulty. So it was widely expected going into this halving event that we may see difficulty drop off anywhere 20 to 30%. That couldn't have been farther from what actually happened. And we've seen difficulty continue to rise throughout the year, basically in unison with Bitcoin price. So this was another one, a lot of discussion around that April period around halving, where would we see difficulty go, that many of the Wall Street analysts just simply got wrong.
Yeah, absolutely. And, many analysts got it wrong. Even miners we had on the podcast early in the year were suggesting what would happen during this year in terms of hash rates. And, a lot of people got it wrong. The impact, people can't underestimate the impact of the mining difficulty. I mean, started at the year and where it finished, where it is now, that's effectively, a 50% reduction. You could argue it's like having two halvings in the same year. In what miners were able to mine in January, if you go back and look at what some of the mining companies were mining in January with a much reduced fleet than what they've got at the moment, they were mining far, far more Bitcoin than they're mining in say November and what they'll show in December. The halving has really impacted that. Well over 50% increase in difficulty throughout the year. That means that impacts production. And then you've got a halving on top of that. You've got a Bitcoin price that for a long period, we're talking the Bitcoin price rallying, just before the election. That was in November. Go back to July, go back to June, just after the halving, the Bitcoin price was, hovering around sort of like the 50,000 mark for a number of months. And people were expecting post-halving that the Bitcoin price would rally, and it didn't quite rally, and hash rate would drop, and it didn't quite drop. So you had more machines going on. The Bitcoin price wasn't giving you any extra revenues, and the difficulty was impacting with less production. So you were getting it on all sides. And we saw from Q3, bear in mind Q3 is the 3 months ending September the 30th, there was only one miner in North America that actually had a net income, and that was Hut 8. And that was helped by a couple of one-off payments they received during that quarter. So, not normally would expect to receive that level of one-off payment. So they benefited from that there. So if they hadn't received some of those payments, they would have certainly had a red period like every other miner. Now, December, we're coming to end December now, we've got a new quarter, and I would expect the vast majority of miners to be showing when they release their results in 2025 for this last quarter of the year to be solidly in the green. Even if the Bitcoin price finishes today at 94, 93,000, that's still going to be 23,000 higher than it was at the end of September. And therefore, you're going to have, a lot of benefit in terms of revenues, in terms of the fact that those with a hodl are going to be able to benefit from the FASB rules. And so we'll see a lot better financial position in that first quarter. And hopefully, Bitcoin price as we go through the bull cycle, we'll see new highs. So we'll see quarter after quarter in terms of having some one-off quarters like we've seen in the last few years.
Yeah, I'm glad you brought up the FASB changes as well, Anthony, because that was a big one in terms of the framework here that benefits a lot of these miners. Prior to that change, obviously, they were only able to record value change in asset when it was going down. So that was another big one. Now, another point you bring up that was a recurring theme throughout the year. You use Hut 8 as an example. Now, they've basically come out with all the details other than the official press release in terms of an HPC announcement, but we've seen their share price rally extensively. Bitdeer is another one that has a massive pipeline. IREN expected to have some HPC. Cypher, TeraWulf just came out with an announcement. And obviously, who can forget Core Scientific with potentially or I'll go ahead and say the biggest news story of the year in the Bitcoin mining space. So can you talk to us a little bit about this shift we've seen throughout the year between the pure play miners and now this HPC balance?
Yeah, I mean, initially it was three or four miners looking at HPC, and some of those were literally forced into it. So look at the likes of Hive Digital, Hut 8 had a load of GPUs from their Ethereum mining days, and they came out straight away as soon as the Ethereum mining stopped, saying we're going to focus on high performance computing and AI because we've got a lot of GPUs here. We're not going to let them go to waste. And so those two companies were sort of like going to be at the forefront. However, the revenues were so low initially. They have improved of late. Certainly for Hive Digital, we're starting to see some meaningful revenues now, and their expectation is they'll really get a grip of that and they'll increase. They've been expanding their HPC business in Europe, where they're sort of moving their mining facilities away from Europe because of the energy price there, but it's still very profitable to do HPC. So these facilities will be still operational, but they'll be used for, for HPC performance there. Hut 8, like you say, they've announced everything. They've announced how many megawatts, they're going to put into this contract. 430, that'll be the second largest HPC contract behind Core Scientific. So that share price has had a nice increase this year. The second, highest performer in the last few months behind Bitdeer. And then you mentioned Bitdeer as well. Bitdeer also moving to the HPC space. They've had that project in Singapore on a small basis to learn all about HPC, get all the errors and the lessons learned during that period there, and then they'll move and ramp that process up there, because what Bitdeer have that most of the other miners don't have is they've got significant power pipeline, and not just pipeline, facilities that will have power this year or in 2025. This isn't fields with a gate and a farmer. This is, real, sites that have, already broken ground, but are coming to fruition in 2025. So they'll have probably one of the largest increases in terms of megawatts coming online in the calendar year next year from tomorrow, effectively. So their share price is unreal. And bear in mind, we're not going to talk too long, but they're starting to produce their own miners as well, which is another great thing. The market does like this diversification. We were lucky to go to Denton, and we spoke to the Wall Street guys there and all the top analyst companies there. And, to be honest with you, many of them said, the great majority said that we spoke to, that they didn't see the Bitcoin mining as a real business at that particular time. They did see the HPC as an absolute business. And so those companies that are moving into HPC have had the benefit of seeing their share price perform better than those that have either said they're not moving into the HPC space, or they've indicated they are, but they haven't really got a fully fledged plan at the moment of how they're going to deliver it. So there is a disparity there. You look at how some of the mining companies performed this year, and it has been a challenge for some of those miners. Even some of the biggest established names, have had a challenging period, certainly this last 6 or 7 months. HPC is predictable. And people, especially these analysts, they like the predictability. They know the revenues, they know the margins, the profit there. And so these companies have really benefited from that.
Compass Mining makes Bitcoin mining accessible to everyone. Start mining in as little as 48 hours with our turnkey hardware, online and mining directly to your Bitcoin wallet within 2 business days. Find out more at compassmining.io and get started now. Yeah, just incredible to see that business division grow in the sector. And we both really like that play as it softens or dampens the blow of some of the volatility related to Bitcoin, especially as you start to think about longer term investment in these companies, multi-year 10, 12-year contracts, very attractive with that recurring revenue. Now, as all this HPC development was going on, Anthony, another development was going on the political side of things. So Donald Trump was attending the Nashville Bitcoin conference. We were both there. We saw him speak. And this is really where, in partnership with Senator Loomis, they came up with the idea of this Bitcoin strategic reserve, or at least this idea got brought to the forefront. So this was really the next catalyst for both Bitcoin and the Bitcoin mining stocks, with the price of Bitcoin shooting up exponentially just based on the discussion of this strategic reserve. And then, of course, the upcoming election in November.
Yeah, absolutely. That was a great announcement to hear at Nashville, and we were there in the audience to listen to President Trump talk about this, and Senator Loomis came on the stage as well to highlight that the document was in draft and ready to start being processed. So, and that's since the election, it's just gained more momentum. The great thing is that the US already has about 200,000 Bitcoin that it's confiscated. So, in terms of the planning, the US are looking to sort of purchase about 200,000 a year for the 5 years. Well, they don't have to purchase anything in year one because they already have confiscated 200,000. Just don't sell that 200,000. Keep that as your year one total, and you've only got to purchase another 800,000 over the next 4 years. Now, if this is to occur, and nothing's set in stone until we see it set in stone, it is game changing for everything else. I mean, if the US do this as probably the most dominant nation in the world, you're going to find literally, how many other states and nations are going to do the same. We've even seen in the last few weeks, Germany starting to ask questions about should they actually, start buying Bitcoin, and adopting it. And they just sold about 50 or 60,000 Bitcoin literally 2 or 3 months ago, at sort of the mid 50,000 points. So, that would be, that's how people are now looking at it. Now that US has stated this, you're getting other countries more interested. So I think if it happens, it's game over. I mean, we've had the great news story this year. We've had so many good news. I'm trying to think, Bryce, if there's a bad one we could actually say. At least in previous years, we can say things like FTX. We can say when Elon said you can't buy Teslas with Bitcoin, that wasn't a great day for the Bitcoin price. Dropped by about 20% that day. FTX caused a massive rift in the cryptocurrency world. And like I say, Bitcoin got down to, 15,500 in December 2022. Interestingly, as an aside, I think FTX is starting to pay all the creditors out in January, because all that Bitcoin and cryptocurrency that they actually held has done really well. So they've actually established probably enough of an increase and assets available to maybe cover the great majority, if not all, the creditors outstanding.
Yeah, it's a great point you bring up. I think they start those distributions on January 3rd to the tune of 16 billion or something, and you would assume a lot of that money will go back into crypto or Bitcoin, which could be a further catalyst. Now, you brought up a great point in that discussion, Anthony, talking about nation states buying Bitcoin. The final trend we've seen almost late in the year here is the adoption of these convertible notes, and in many cases, convertible notes being used to buy Bitcoin by the Bitcoin miners. So this is a strategy we saw in the last bull cycle. As you mentioned yesterday, it didn't work out great that time around. However, this is another trend we've started to see emerge in 2024.
Yeah, and we did have, I think, Marathon Digital in 2021 did access a convertible then, and it was quite a large convertible, if I remember right. I think it was about 700 million. But none of the other miners went down that space. It was very challenging for miners to raise capital. There wasn't many levers from available. They could sell Bitcoin, they could go to the debt markets and borrow, and some were paying ridiculous amounts of interest rates, and it caused a lot of problems for a number of miners. Some were either went into Chapter 11, some were close to Chapter 11, some insolvency and then had to be, purchased as parts. So it wasn't a great time for mining companies. But this last 2 or 3 months, we've seen a number of the bigger miners being able to access this type of debt, the convertible notes. And actually, what was interesting was it wasn't to grow the business; it was to a lot of them to buy Bitcoin and put it on the balance sheet. And we questioned this before. We've seen miners in 2022 buy Bitcoin, and it didn't work out too well from then. I mean, Bitfarms and Argo blockchain bought, talking thousands of Bitcoin and then ended up selling it for like half the price they bought it for. So it wasn't a great deal then. But we look at the Bitcoin price this year, we look at all the good positive news stories we've talked about in this podcast, and, who's to say the Bitcoin price won't do something similar in 2025? Especially when we have the president be inaugurated in 20 days time. We will probably see a rally in Bitcoin up to that date and maybe just past that date as well. So these levers, few and far between. We've seen that convertible note really being utilized well, and the fact that many of the miners have been able to get this for very, very low interest rates, in some cases zero coupon rates of the big miners. CleanSpark, clearly they didn't want to buy Bitcoin. They're looking to use the majority of the money that they've received in terms of expansion. They're also going to look to buy some shares back with some of the funds they received, and also got some sort of a call option in place there to protect the share price as well. So They've done something slightly different for the likes of Riot Platforms and Marathon Digital. Went straight out and literally spent a whole convertible note on buying Bitcoin, increasing that hodl in the expectation that the Bitcoin price rallies. And if Michael Saylor gets it right, who's to say they're not going to be in the same position as well?
Yeah, it'll be interesting to see how that works out for those companies purchasing Bitcoin. Now, I want to use the word transformational to describe the year, Anthony. I feel like that's the most overused word in these press releases or calls that we listen to. But if you think about Bitcoin, whether you're talking about the economics, the price of it, the political landscape, the adoption, it really has transformed. It does not look like the same environment or sector it did at the start of the year. We've got two additional pieces of news that we want to talk about in today's video. And the first one talks about yet another trend we've seen this year in the mining space, the concept of moving or redomiciling their business to the United States. So the first press release here is from Hive. We just had Frank and Aiden on the program not too long ago talking about this concept, really highlighting the success we've seen with HUD 8, partnering with USBTC, going into the US market, and really taking off under Asher Janut's leadership. Hive is now looking to take a page out of their playbook, redomiciling their business to San Antonio, Texas.
Yeah, and Frank's based in San Antonio. He is Canadian, but he's based in San Antonio with his other business. He runs a large investment fund in the sort of like the gold sector. So, I mean, there's real benefits for some of these non-US companies to transition back into the US there. So yes, they're going to relocate. They've already actually started to rent office space in the San Antonio area to help mostly to achieve this. And there are a number of benefits by making this move that are not readily available for the company that currently located in Canada itself. So, in the same way as HUT changing its office to Florida, Miami, Florida, the benefits for Hive will be the access to a thriving blockchain ecosystem. And if you think about the United States at the moment, they are really the dominant country now in terms of Bitcoin mining. I think it's getting close to 40% of all Bitcoin is mined in the US. So that's definitely one positive thing there. The business environment in Texas, we've seen that from all the way from the senators in Texas are very pro Bitcoin. We have, in fact, Texas is the largest state for Bitcoin mining in the US. So again, there's a positive news story around there. Donald Trump has already spoken about the innovation and establishing this framework for the cryptocurrency ecosystem. He spoke to many of the miners, many of the miners that are based in Texas as well. So equally, it's a positive story there. Access to capital markets is really key. So by being US, you can, as your market capital increases, you've got access to other markets there, and you've got the Russell 2000, the Russell 3000. So the likes of HUT 8 have been able to access that there. And if you can access these markets, it means that once you're part of an established fund, like say the Russell 2000, 3000, then there's a requirement for the big investment companies to buy your shares because they'll have to buy a basket of all the shares in the fund. So this is more capital for the companies, able to achieve that and be able to grow more effectively and efficiently. And if you go back 3 years ago, Hive were, one of the biggest miners in 2021. Certainly from a revenue perspective, nobody could achieve the level of revenues that Hive were producing there. But in terms of market capitalization, they haven't had the same benefits that some of the US companies have had there, the likes of CleanSpark, the likes of Marathon, the likes of Riot. Now we've seen lately the likes of HUT 8 as well, really growing, over 2 billion. Hive probably feels it's been left behind. Now here's an opportunity for moving to office and gaining some of that ground back.
Yeah, I think this is a great move. You talk about some of the benefits of being located in the United States under the Trump administration, specifically Texas, where we've seen such competitive power prices, even on the market rate. And now we have Trump coming out saying he wants to make even more access to cheap power in the United States. So I think that's a great move for a number of reasons. Interesting you bring up the inclusion in the indices, as we just saw MicroStrategy get into the QQQ. However, since the inclusion into that indice, MicroStrategy continues to struggle here. That was another prediction we talked about towards the end of this year, Anthony, as we feel like the miners are now stepping up to the plate and getting ready to shine in the first or second quarter of 2025 here. So some great observations. And before we move on to our final news article here, Anthony, I just wanted to give you the opportunity to wrap up with Hive.
Yeah, I mean, the final thing I'd like to say is, and this is from an accountant perspective, is by moving to the US, they'll be reporting their results under US GAAP. So GAAP is generally accepted accounting principles, and that'll start with its audited financial statements for the fiscal year ending March the 31st, 2025. And effectively, then you'll be able to easily compare their results with US and international peer miners there. Darcy Deboras, the CFO of Hive, has basically said, the relocation of their head office to the US and changing their reporting method to US GAAP aligns with their strategic goals of operational efficiency, sustainability, and expanding their market presence. And these moves enhance their financial transparency and position for long-term success in the global market. So this is all encapturing there. It's a positive move for Hive. We spoke to a number of CEOs of those companies that weren't domestically located in the US, and every one of those CEOs said it was on their agenda. Hive have come out now and said they're doing it. It won't be long before we see a number of other miners match it.
Yeah, a great way to close out that segment. Now, another miner that's talked about moving to the United States is Digital. However, they've come out with back-to-back press releases over the last 2 days, Anthony. Yesterday, we covered the news talking about acquiring the building and land adjacent to their data center, so potential expansion there. Today, they're coming out talking about executing an MSA. So, my turn to do an acronym here, Master Service Agreement for 576 H200 GPU with the DNA AI Compute Fund. So, this was the news we were waiting for. Obviously, great to see HPC growth heading into 2025 and underscoring that theme we talked about earlier in today's video.
Yeah, this is great because what it does is it effectively provides clarity now on their getting towards that 100 million a year annualized revenue run rate for their HPC business. And this will be achieved in early 2025. So the contract you just mentioned there, the 576 NVIDIA H200 GPUs, that'll be providing an aggregated revenue opportunity of about 20.2 million. Bear in mind, earlier in December, they announced the purchase order for 130 H200 servers, just over 1,040 GPUs for approximately 30 million. And the company anticipates deploying many of these GPUs to separate customer contracts. So one thing Sam said at the start of the year, we're going to get to this $100 million annualized revenue. Looks like they're going to achieve it very early in the 2025. And judging by the number of updates they've put out, and we're hoping we're going to get Sam on the podcast in the next week or so to highlight this and to highlight other things that are going on, I think they'll exceed that 100 million in that first half of 2025 because they've also got their current client as well who wants to sort of like looking to increase the exposure in the HPC world. And they've got a number of other clients. They've got a couple of HPC centers that they've purchased. So things moving very quickly in this business space at the moment for Bit Digital. And bear in mind, they still are a Bitcoin miner as well. So they might have 100 million annualized revenue from their HPC business, but in 2023, I think they'd achieved over 40 million from the Bitcoin mining. So, look at their market capitalization, look at their enterprise value. They do a bit of staking as well. So remember all the Ethereum they've got, 27,000 Ethereum, I think last time I looked. They stake that, they get a nice revenue every month from that there in terms of staking their Ethereum. A lot of good positive things about Bit Digital. And I'm sure Sam will be able to highlight some of those positive notes when we get him on the podcast.
Yeah, I was going to say maybe our first podcast of 2025, which is exciting, but you're exactly right. Really putting their foot on the gas at Bit Digital, especially in the HPC side of things. So really a great fitting ending there, Anthony. We talked about the importance of targets throughout the year. Sam Tabar and Bit Digital delivering on that commitment in the final few hours of 2024. Now, the other thing that's wrapping up in the final few hours here is Miner Madness 1.0. So this was our inaugural Q4 miner trading competition. You and I, Anthony, are still managing to hold down the top analyst spots. Bitcoin is trading right in the middle of our two predictions there for the tiebreaker. And of course, on the regular main board, an impressive showing for the hundreds and hundreds of applicants or contestants in the contest. So tomorrow's podcast is going to be focused on Miner Madness 1.0, the winners, the prizing, and of course the 2.0 competition. But with that being said, you guys, the final trading day of 2024, I wouldn't worry too much about the chop, noise, or volatility. And with that being said, we'll see you back here tomorrow for the first day of 2025.